Weekly focus, central banks hold steady course despite banking jitters, 24.3 2023 after Arab's takeover of Credit Suisse. And the wipeout of atoned bondholders. Risk sentiment remained on shaky grounds this week. Investors took courage from comments from European regulators that reiterated that common equity instruments are first in line to absorb losses before atones. Yields started to rebound and markets have now repriced the peak rate back to 3.5 as more time lapses without more negative news on the banking turmoil. More focus will return to macro data, which still warrants further return pricing higher in our view. President Lagarde delivered a fairly balanced speech at the Watchers Conference, stressing that policymakers, after ACA remained in tightening mode last week, the Federal Reserve chose to hold a steady course this week and hike policy rates by 25. That said, both the statement and Chair Powell's comments were to their side, highlighting that the recent banking sector developments are likely to result in tighter credit conditions for households and businesses, and to waive Chinese President Xi Jinping concluded his 3-day visit in Moscow. During the visit, China's peace proposal was discussed, but also a deepening trade relationship. We have doubts that China's peace proposal will gain traction, as it has been widely criticized by the US. And Ukraine and Russia are very far from each other in their individual demands. A key concern that could escalate global tensions has been whether China would deliver weapons to Russia, but so far there are few indications of this. With the big central bank themselves out of the way, developments in the banking sector will continue to set the tone for markets in the near term. In the US, focus remains on any signs of tightening bank credit standards, the use of Fed's liquidity facilities and font commentary in light of exit-data dependence. Markets will also keep a close eye on the euro area hit figures for March released on Friday. Despite a further decline in headline inflation to 7.9, we expect them to show still a picture of strong underlying inflation pressures, with core inflation remaining unchanged at 5.6. The official Chinese are also on the agenda on Friday.